Hello traders, Gary Wagner here, about 10:30 in Honolulu, 4:30 in New York on Thursday, the 27th day of March, 2014, and this is the daily report for gold and silver. Continuing on a trend that began really when the market tried to hit around 1400 and backed off, we have another lower day in terms of pricing across the board in the precious metals markets. Gold right now is off about 8% on the day, 1291. As you can see, that's our current print. The low 89.40 and the high 1306.70. Has it hit a bottom? That will be our primary topic all on today's daily report. Silver also tracking lower, but it's only really trading off about 4 cents. You can see it is holding above a level that we have talked about on previous shows, which is about the 1958 area. We'll talk about silver towards the end of the show. Traders, want to begin the show today looking at this 320-minute chart. And on this chart, basically what we've got and what we're looking at is this primary rally after hitting our double bottom. Of course, this double bottom was at around 1180, just above that, 1185 and change, somewhere in there, all the way up to about 1390. So a sizable move, a couple $100 move. Now, at this point, we've actually gotten a fairly sizable retracement. The key is that have we found a level that we can look for support? Have we found any evidence that support is coming into the market? That's a two-part question. The first part, are we at an area that we really need to look at as a potential bottom? The answer to that, in my opinion, is yes. Have we received any technical evidence backing up that point? Well, no. What we have received is technical evidence that shows us that the market has surpassed a 61% retracement. This, of course, is the shorter of the two retracements. You can see that begins right in here at around 1236. And when we look at our more appropriate, because it covers the entire span of this last rally, you have a 50% retracement at 1287, and that's just ticks, if that, from the low that we hit. You can see that the low pretty much matches up with this 50% retracement. So what are we looking at? Well, the key is this. We want to absolutely see if we can find any kind of signals within this market that show us that we've got some sort of bottom activity. We haven't gotten that yet. We'll look at our dailies and our weeklies, of course, and anything in a more compressed time period isn't going to show us that, but we'll look at our dailies and maybe another intraday chart. What we do have is a logical point to look at. What we do not have is any kind of conclusive evidence just yet. So when we look at this market, there's absolutely no question. This is a point we could see the market find some support. It's given back roughly 50% of the most recent rally. So in essence, what we've seen is a $200 move up and a $100 move back, or retracement 50%. So that's a logical point to look for. Now, what do we want to see? Well, we've gotten our first parameter filled, and that is, it is in an area that we want to look. We want to look at a couple other charts to see if we're getting confluence or confirmation of that. But this is an area we want to look. If it cannot hold this area, in other words, if we see it break through, if we go back to the lows and break through, say, 87, 88, that's the current low, then our next real target has got to be 1872. That's a minor target. Our major target is a 61% retracement of the move, and a 61% retracement takes you to 1262. Now, why is that important? Well, you're really on a basic corrective wave, even a strong corrective wave, a very strong corrective wave. You really don't want to see too much more than a 61% retracement. Can go 76, but that is a rare occurrence. It's more likely that it will stall somewhere here. If it begins to break below, for example, this 61% level, we could, in essence, have our count invalidated if we broke far below that and started to threaten this last rally. You see, when we look at this market, the highs that it hit took us to, but not above, that level that I was looking at that would give us what I believe would be conclusive technical evidence that we were in a bull market and not a counter trend. And here's what I'm talking about. Now, what I've done is I've gone ahead and pulled up our, basically I call it a cascading channel. It's drawn with an Andrews pitchfork, as you can see right here. We've talked about this on a number of times, but the key on this particular chart, handle and your outer rungs, or the outer prong, so to speak, we take the zero line, and as we talked about, for the first time since we have created this chart, we actually exceeded and went above this upper level band for this channel line. However, it came right back into alignment. That's the first thing. If we then take this top, this is 1435, we shied out at around 1390. We haven't really hit this top. So what I would look for would be something like this. If in fact what we are looking at is this market breaking out, and why do I believe that that's possible? Well, easily, it's very, very easy as a what I call an armchair quarterback to look back in time. But when we take a look at this most recent move, you'll get these series of lower highs and lower lows when you compare low to low to low. Now, that begins to change middle, call it June of last year, when we had that dynamic rally. We actually get a higher high. So the higher high is really comparing it to these most recent highs. We get a higher high, and then when the market comes down, if we compare this low to this low, we actually have a higher low. So that's really the most important stuff to get us thinking that we could be seeing a turn in the market, because really when you consider in its most simplistic format, lower highs, lower lows are really the characteristics of a market that's selling off. The reciprocal, the opposite, is true for a market that's moving up. We're looking for higher highs and higher lows. Now, we got a higher high, or excuse me, we got a higher low, but we never got the higher high because this high fell short of this last high here. So what would we be looking at? Well, one potential way to look at this market, and this is the model that I'm currently looking at, is as we see this market move up, we got the higher low, market comes down, and now you can see it's pretty much touched this inside prong, and that's the second reason that I feel we've got a good opportunity to find a bottom and then see it move up. And of course, to move up, when we get a clear break through this particular zero line, I think we're up and away, and we've got the kind of technical confirmation that we've been looking for. But what I find most interesting right now is, personally, I would have much rather the gold prices had broken out and continued. They didn't. But now what we're seeing is this. We are seeing, when we look at this 23%, you can see that we're really now pretty close to it. And so we could be finding a bottom. We've got Fibonacci telling us that this is a point to look. We've got our cascading channels telling us this is a place to look for a potential bottom in the market. Let's see how the market unfolds, because you'll see as we look at some of these outer charts, the weeklies or the 2 weeks, they are not going to confirm any kind of a bottom in this area and are going to still probably be showing us a strong bias to the downside because they are so compressed and they lag behind real-time analysis. Now, as I said, when we look at our daily charts, we used our cascading channel lines. We used Fibonacci retracement as we have here. This is that same fib retracement, these same 2 points. Of course, this is a different chart, but we see that it's hit a pretty logical band where we could find support. It surpassed these areas, but we talked about there being a band really between about 1287 and 93, somewhere around there, and we're trading right now at around 1290, 1291. So we'll have to see. If we look at some of the longer term charts, such as a weekly or a 2 week, it's still showing us a pretty bearish tendency. And this is what I mean. This is our 2 week chart. We talked about the shooting star, the double dojis. We also talked about the fact that we had this 3 river evening star formation here. You can see the star formation right here. You can see the star formation right here. very, very slight variation. You have that small body candle up here. What I'm trying to say is that it is a fairly common pattern when we talk about the variation, when we're able to isolate really the key elements of that pattern and kind of adapt it to the market. We can see that on many of these tops, you get the small body doji kind of gapping between a green and a red candle. Small body, green and red. Small bodied, green and red. Small bodied, 2 stars, green and red. So we've gotten that variation, and when we look at it in this way, you can see we could see the market go lower. We could actually see it break, and if it did that, traders, then we're looking at a completely different scenario, because then we're looking at a series of highs that are lower. Remember, this is a lower high here. We never got that. Now, double bottom, support, but if we make a lower low, it's simply still tracking in this downward channel. My sense is that we probably hit a bottom, and the reason I believe that is because of A, our current Elliott wave count, and B, the 61% retracement, which took us to 1144, just off of the 1180, so $40 shy. But when I say $40 shy, we're looking at $40 shy from a move that we are charting, and let's go ahead and compress this so you get a real idea of what I mean by that. This 61% retracement, of course, is a retracement from about 700, just below 700 to 1900. It's a $1,200 move. And so because of that, this is a logical place, just like we are looking at these shorter term Fib retracements. If we're going to find a bottom, this is kind of our line in the sand. If it breaks below this much more, there is absolutely no model and no case to be made for a pivot point or a conclusion to this major fourth and a beginning to a major fifth. It absolutely makes no sense if we broke to new lows. So for those reasons, my belief is that we still have a decent probability. What we do need to see is more conclusive evidence, as we talked about, that show us that we are moving into a bullish trend, not just at the bullish trend. And that's what I believe we saw. For example, when we looked at these channel lines, we were at but not above, because we just went slightly above. So we really need to see this market find some sort of support, because we're looking at this on this cascading channel line, and then more importantly, break above this zero prong, because when we consider that we've met the criteria of really reaching this long-standing resistance, and it looks kind of funny because of these cascading lines, but that was our first indication. We had a tremendous $200 rally. We did well in that rally. Now the market's topped off just above that. If it finds support, moves up, and significantly we see a break above this. In terms of what information that gives us on a technical basis, traders, I believe that's huge. So traders, what about silver? Well, we talked about the fact, and for traders that have been with me for some time, you know that 1958 was really an important area that we identified. And this is back towards last year. This is a very, very short-term 240-minute chart, and it is trading above there. We talked about the levels below that, 19 and a quarter, 1950, call it 1875 to 1877. These are those bottoms right in here. My sense is that silver will continue to follow gold, although it's tracking differently, meaning the percentage moves are, the ratios are completely different. So for example, today we've got gold down a full percent. Silver is only off 0.18%, not even 0.2%. So it's showing us some kind of support, but we've seen that extreme volatility in the market. In the same way, we are going to look for signs that gold is bottoming. We've talked about what those signs are. Now we're going to look for candlestick patterns that will basically identify pivot points. If we get that, we'll look for the same to happen in silver, because even though the ratios, meaning the percentage gains and losses, vary, they tend to still run in tandem, and it is a not common, I should say, to find gold moving up and silver moving down on a regular basis. It's just not something we see all the time. So we'll take a look at that also. We're going to sit on the sidelines. We know what we're looking for, and if it can hold in this area, we're going to have a great opportunity. If it breaks through this area, traders, we've defined the areas we're going to look for it to go. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for the weekly wrap-up and review. Bye-bye.